Well, after the gut-wrenching fall in the month of July and August, how should one really assess the current market? The lay of the land is that slowdown has now started hurting us, and there seems to be a challenging global environment. So how can one protect their capital or currently monetize the environment to their advantage to maximize this environment? Good news and good prices, it rarely comes together. And my guest on the show today is someone, he says that, look, I love the bad news because when there is bad news, I get good prices. How should one understand the bad news, and how should one take advantage of this bad news? So to discuss all that and much more, I have with me the evergreen man of Indian stock markets. He's himself a mascot when it comes to the bull market, Raamdeo Agrawal. So good to see you. You typically love this kind of a market, right? Because news is bad and prices are great.
No, yesterday was not good. Yesterday was quite scary, and I'm getting to feel that we are into a proper bear market. And how do you? You have to be very cautious. And now you don't have to preempt any news fundamentally. After hearing everything, after analyzing also, if you go to buy, you get 5% cheaper than before the result kind of thing. So this is a very different market than what it was just a year back, you can say. Okay, so bull market and bear markets are very different. I'm not. I don't want to sound like a technical this thing kind of guy, but if you see the last 30-35 years, there are 3-4 phases of bear market. Like when I started my career in 87, 88, 89, these 3 were terrible years in the market. And then, from a 600-700 Sensex, we shot up to 4,500. That was mother of all the bull market, led by Harshad Mehta bull run in 18-19 months, between 91 to 92, 92 end March. So that was one phase of bear market, and then finally ended in a massive bull market. Then next 7-8 years were kind of gone nowhere type. There were no index, there was no ET now. We didn't know anything what is Sensex and underperformance, outperformance. Slowly market was, then there was a massive liberation followed by the collapse. Then the industrial licensing was withdrawn. I didn't realize what has happened, but the world changed actually. Otherwise
the license Raj had gone.
Yeah, license Raj was gone suddenly. Liberation was in and globalization was in, and you suddenly started seeing consumer goods and services coming into the country. Otherwise, for a jeans or for a ball pen, you had to ask somebody from abroad. So, and now you see in last 20-30 years, there is absolutely, if you go to any of these countries, Europe, America and all, you don't find any gap between what you get here and what you can buy from there. So that's the kind of a massive achievement in this thing. And then we didn't have the forex. We had about $1 billion or $2 billion. We had to send some gold. Today you're sitting on $430 billion of reserves. So there's a massive change in this period. Come again to post, then we had a software boom, Y2K in 2000, and then post collapsed after 2001, 9/11 happened, and then 2001, 2, 3, these were terrible years. We incurred loss for 2-3 months after 87. So that was very, very scary and very bad. There were no new highs. Many days there were no new highs. I used to pray that there should be at least 5-6 companies, 10 companies, at least few companies from my portfolio should be new high. It was almost impossible. Then we saw mother of all the bull run. And almost everything was a new high in 2008. From there, again, now this time it feels that we are into some kind of a prolonged soft market.
So is this beginning of what could be called as 2001, where for next 2 or 3 years we may not get new highs?
There will be bouts of rallies will be there, and the good companies which are doing well, obviously they will progress. But there will be few and far between, because broader economy is in slowdown mode.
If interest rates come down further, and if government starts spending and they say, look, we'll not bother about fiscal deficit, we know that we need to spend more because corporates are not spending and they'll have to do all kind of an heavy lifting, could we see a very quick revival? Or this economy is gone for next 12, 18 months?
Don't create any expectation on anything quick, I'm telling you. It is going to be a hard-earned and slow turnaround. And I'm not a great macro guy, whether government is spending, but I'm meeting 100-200 people almost every day. The investors or mid-sized corporates, large corporates. So we get to see some color of what's really happening in the ground. So there are a lot of actually one of the thing is that there is a lot of negativity, more than what is actually the problem in the economy. So you speak to somebody. Yesterday I called up one dealer in say Jabalpur, and I asked how you are doing. So बहुत खराब है, ये है वो है. But I said, what's your book? How good is your book? No sir, I have grown, but everybody else is not done well. So there is a lot of. I said, what is the problem? He's saying that the problem is the negativity through the channels, through the newspaper. Generally, the buzzword in social media is that there is a lot of problem. Now, when you have this kind of perception, even consumer thinks, should I buy the car? Should I commit to new EMI? Is my job safe? Is my bonus safe? So those kind of fear is unnecessarily creeping in.
That's the time Raamdeo Agrawal steps in. Raamdeo Agrawal steps in when a good business goes through a cyclical downturn. Raamdeo Agrawal steps in and he will start purchasing, or he will start investing when sentiment is having an impact on prices, not actual reality.
Yes.
Where do you think markets currently are suffering, or prices are suffering because of sentiment? Because the word slowdown is not a July phenomenon, it is a phenomenon. Auto sales have been slowing down for 6-8 months now. FMCG sales have been slowing down for 6-8 months now. How come everybody is suddenly talking about it in the month of June and July? How come the fall has been excruciating in last 6-8 weeks?
No, see, I mean, we had been seeing that earnings estimates are going haywire, but it was going haywire in terms of 5-7% and things like that in December. First trouble started cropping up not so much in the September last year. It was December quarter for sure. There was a problem. I mean, initial this thing, but still we thought that it will get over and New Year will bring a better time. And then the slowdown really kind of caught on. And till March, what they did, most of the manufacturers, to save the 18-19 books, they pumped, and inventory got accumulated big time. What they did, I mean, that's what my general understanding is, that in first quarter of FY 19-20, they kind of made the wholesale correction in the inventory. So what they did, the production got cut right now, and actually the retail sales were not as much down as much as the wholesale sales were down. But what you get to hear more about is the wholesale this thing. So now there is a kind of a clamor that slowdown is almost double than what exactly is the slowdown. There is a slowdown. The inflow of the customers, footfalls and all are lower, and that is, I mean, half of it could be only because of general negativity in the system. There is a pessimism. There is no mood of optimism. Government is trying to tax too much. I mean, even that insurance cost. I mean, suddenly 5 years insurance. Then on top of it, registration. I mean, a whole lot of and then EV. I mean, disruptive talks by some officials that EV will come and the old system will go away. So these are things not helping the businesses, particularly in the environment of slowdown. And then you have the NBFC crisis, which is basically last mile funding system. And there, how, I mean, of course, the authorities are aware of the problem and they are taking whatever steps they can take. But that also has to come around. Some alternative mechanism of last mile delivery has to come up. Without that, how will you take care of last mile? Because the banks go up to the branch. Beyond branch, I mean, finding 10-12 lakhs ka house and giving him a loan, who does that? It has to be done by NBFC, specialized NBFC. So, but that NBFC, is he bankable? From where will he get the liability? Because he gets the liability from banks or mutual funds, and the same liability is being given to this thing. But the entire architecture has broken down because there is a doubt now on the rating agency, now on the banks and the NPAs, and so the whole thing is kind of somewhat disoriented right now. It will fall in place slowly. Good guys, the guys who have maintained themselves well, whose capital adequacy is there, who have underwritten very well, I think they will survive and they will come back. But it's a cyclical process.
So do you think right now markets are confused? There is a section in the market which feels that this is a temporary slowdown, and there is a section in the market which feels that this is a structural slowdown and the demand and the economy is going into tailspin for next 2 or 3 years?
See, I don't know about the timeline. There is a slowdown. There is a slowdown. Whether it is going to take it is not going to happen that next month you do 3 things and suddenly there will be a boom. No. It will be a...
So FY20 is a washout.
So you have to... No. Government and authorities, they have to do what they have to do. Let the market, entrepreneurs, consumers, they will take their own time to come back. But let's not expect that something will, the results will be dramatically, overnight. Markets can be dramatically overnight. See, it doesn't take for me to take the market up by 10-15%. Like July was down by 7-8%. Even yesterday was very scary. So 2% in one day. So markets can move much ahead. So there are two different things. One is the economy and second is the perception of the economy through the market. The perception can change quite dramatically in a month's time.
So if I have to make a prism of greed and fear, greed is out. But in terms of the fear gauge, are we in fear or are we in extreme fear?
I would say fear.
Fear.
I
So there's
would say
scope for
yesterday was
prices to
extreme
come
fear.
down. So
Yesterday-
there's scope for prices to come down.
Yes, why not?
10-15%
It can
cannot
become
be
quite fearful.
So fundamentally we are not
Because there is
attractive.
no corporate earnings outlook is bad. Outright it is bad. So if earnings outlook is bad, I mean, see, my single source of optimism or pessimism is from the company's outlook for the business. Because I don't understand how the globally it will play, global macro, local macro. It's बहुत difficult to figure out in one shape. But when I talk to a company, how the company is doing, that we can kind of, some kind of build up we can do.
Common friends tell me that every time they feel disappointed or they have had concerns about the Indian economy, they've called you. Because in a sense, you have this image that 24/7, 365 days in a year, you'll be bullish. But for the first time over the years I've interacted with you, you're not sounding bearish, but you're sounding hesitant to me.
No, I'm a bull in bear market. See, when we're talking about market, I mean, when we talk about bear market, it is for the market per se. But I'm a bull.
You're
I'm not
still
selling.
bullish. You're
I'm
still fully invested.
No, I'm fully invested. I'll go down with the market only. I'm not a guy who's sitting on 10% cash and things like that. So that is not the issue. My status is not changed, but the market, the conditions in the market has clearly undergone change.
What does the current market condition mean for future returns for next 3 years, 5 years?
Lower it goes, higher it will be for the future.
So do you think this is more like a base preparation for next bull run?
Yeah, see, every market after 7, 8, 6, 7 years of see, when this government came, there was a complete hopelessness kind of situation. In October of 2013 or 2014.
14.
No, 14 they came.
14 they came.
Yeah,
market
but
started
13.
rallying in
Yeah,
August
from
2013.
October 13, when I think Modi ji was nominated as Prime Minister elect nominee in
By the
Goa.
BJP, yeah.
That time index was about 6,000. From there the rally started. So in next 5 years or 4.5 years, we had a rally going from 6,000 to 12,000. So it was a nice 15% compounded, and individually stocks have gone 10x, 20x, whatever. But it was a nice 5-year run. Okay, there has to be a correction, just to correct the. But corporate earnings have not grown. Corporate earnings have grown only 5%, 6%. So obviously there has to be a massive correction across the board. Our index P multiple, Nifty went up to more like 25, 26, which is now about 22 or something, 22, 23.
So are we reasonably priced? Are we cheaply priced?
No, we are by the historical average about 15, 17, say 17, 18. Though interest rates are much lower now, so that can account for a little higher valuation. Because now we are into trajectory wise, I think interest rate is much lower than, I mean, earlier it used to be 8-9% was the norm. Now we are talking about 5-6%. Still talking lower. So clearly that can accommodate little higher valuation than usual valuation. But look at the corporate profit to GDP. It's less than 2%. What is the market cap to GDP? It's 70%. Yesterday it was 113 lakh crores, 139 lakh crores, 140 lakh crores. My GDP is 200 lakh crores. So we are talking about 70%. US is 150%. And so, I mean, can it go to 60%? Yes, if my corporate profit doesn't come down. So I see my corporate profit is further goes down and my GDP keeps growing at about 10-11%. Obviously, markets will remain here and GDP will keep climbing. So my market cap to GDP can come down to more like 60%. So these are not sustainable levels.
But what is your view on profits then? Let me ask you the question.
It's not looking
immediately.
good right now.
It's not looking
Not looking good. There's no impetus for the.
And that's across the board?
I mean, broadly. I mean, see, private sector banks, because they are in a very cozy situation now, competition from NBFC also has to the extent gone down. So they're in a lender's paradise, They've got IBC
They have high
powers.
NIMs and they have market share gain.
They have got all kinds. They have the liability. They can create their own deposit. They have the whatever customer. I mean, economy is doing well. It's not. 5-6% is not bad. So economy is still growing. So and they have the pick of the customers. And so I think they will
So
have very
private
stable
sector
margins.
bank is one end of the market,
Yeah,
especially
yeah.
corporate banks that will do well.
Yeah.
Okay, I'll talk about autos. And couple of months ago, it's not once upon a time, just about a year ago, year and a half ago, Maruti had a P multiple of 40. It had reached almost 10,000 rupees. Do you think we may not see those levels and those P multiples for Maruti in a long time now?
No, no, no. Everything will come back.
Everything
See, I
will
don't know how long it will take. There's no, I mean, now since it is, the reality is that it is 5,500 or 6,000. So from 6,000 to say 12,000 is doubler. I would still think it will take about, it can take about 3 years.
No, but at a time when we are talking about a real disruption which is coming from EV, do you think that will peg the P multiples or that will compress the P multiples?
They could be the winners in
They could
this electric vehicle also. So I think electric vehicle is little away, at least for India, because for $5,000 to get a worthwhile electric vehicle, and you need the infrastructure and all. Even worldwide also, it's not a that big a what do you call push in terms of total number of cars, EV cars sold, and then they give subsidy and all. I don't think our government has that kind of a fiscal space to give a lot of subsidy to car buyers, you know. So I think we are a little away, and we are very, I mean, we buy 800,000 cc cars, which are very, very lowly priced. I think the real thing is that as the EV picks up worldwide, actually the fuel prices will go down. Crude prices will come down to more like $30–40. At that point of time, it will be very affordable. The IC engine, which has a lot of parts, which creates a lot of jobs. I think government should seize that opportunity. In fact, we must push the old technology as far as we can push, and then let EV on its own merit come back and take over the eventually in 15, 20, 25 years. Obviously, whatever happens in the world will happen in India also. But why we disrupt the current business which is going on very well?
Okay, you know, I'll take the clock back by 10 years. 2009, we were in the same office. We were coming off the financial crisis, and we were eating Maggie in the same room. And I said, what is your market view? He said, look, have you stopped eating Maggie? I said, no. He said, even I have not stopped eating Maggie, and that is the reason I'm investing in Nestle. So it's not that Indian consumer will completely fade away. It is not that consumer will stop consuming. So where are you picking these spots where you think right now the demand may be low, the cyclical sentiment may be poor, but eventually a year from now, 18 months from now, both demand and sentiment will improve?
So, Nikunj, you have to figure out, are you an investor or a speculator?
Okay.
Investor means few years.
Couple of years.
Nowadays, I don't say even 3 to 5 years. I say till you make money.
Okay.
Okay, this is a new, because the guys who came 3 years back, they have not made money.
Of course,
okay.
of course.
So now we are saying that till you make money, because I have seen it takes 2 years, 3 years, depending on when, but you make tons of money. Every bear market or soft market gives birth to amazing bull market. So this correction, if it lasts for,
जितनी बड़ी तेजी उतनी बड़ी मंदी,
जितनी बड़ी, हाँ, उतनी बड़ी तेजी, तो वो होने वाला है. Samman, I am seeing for last 40 years, this happens. So it will happen. Okay. Now how much is going to the correction, where exactly will bottom out and all, only chartists and all those guys can figure out. I have no idea. So what I am saying is that the journey from current $3 trillion to $5 or $6 trillion, doubling of GDP, will happen in next 7-8 years, for sure. Okay, that will happen. Despite all the gloom, I still believe that if not 2025, in 2026, we will be $5 or maybe even $6 trillion. Okay.
Time we don't know, but the destination we know.
So the discretionary spend build-up will happen. It will happen. All this pessimism, maybe 3 months, maybe 6 months, the fantastic monsoon, I don't know, I mean, maybe a little more reasonable oil prices, little more softer policies from the government, I think we'll be again back.
So the sectors to bounce back again would be the same sectors which are getting affected.
You must buy what you understand. You know, because saying that consumer is very expensive, there's no point in just piling onto that. I mean, there are companies which are emerging from all sorts of, there are a lot of tech companies, some specialized pharma company, some consumer companies, some even auto companies. You know, I mean, at some price, autos are going to be, because one of the things which I have learned is that don't follow the, see, your portfolio is made up of 2 types of stocks, secular and cyclical. You cannot apply the buy and hold and don't bother about selling the stock when it is cyclical, would be very dangerous. You know, so
metals are cyclical. You cannot buy and own them permanently.
Yeah, so you have to know how to handle secular stocks and how to handle deeply cyclical stocks. This time I got completely hammered by my good amount of auto holdings. which turned out to be cyclical. It was cyclical, but I didn't know it is coming, and it is coming so severely. So we had to take 40-50% knock, say Eicher, your Maruti. I mean, we had
It's a painful knock.
And large allocation, 7%, 8% allocation. So just between these two, we had 15%. 15% has come down to say half. So 6 to 7% decline in entire portfolio has happened because of these two. So yes, we have suffered. We are learning. I mean, stock market is a continuous learning machine. You learn. Next round, we must position it rightly. But this decline will throw opportunities in a lot of sectors.
One last question. When we pitch financial planning to a common man or a common investor, we always have a pitch that start with SIP. It's a beginning step, but I think it is the best way to really create wealth on a long-term basis. Last 3-year and 5-year experience for some schemes has not been very rewarding. What would you tell to a SIP investor who said, look, I have taken a 3-year view, I have taken a 5-year view, and I have not made money?
See, don't appraise any investment in bad market, I'm telling you. You'll get depressed. Let the market go to high, and then all these guys will be shining, I'm telling you. All the schemes will be shining at the top of the market. So, I mean, in bad market, 3-4 years, see, you came at the, say, you got one high and first low. So what will be the average? Average will be bad.
That's a great point. So if you've come 5 years ago, you got one high and one low.
Yeah.
And right now it's low.
And at the low, you are appraising your portfolio. So it will be literally flat. I mean,
so a decline in market is actually great news for a SIP investor because he's getting more leverage.
Fantastic. Now you are able to buy for 1 rupee, not 1 liter. Now you are able to buy 1.5 liter. That is what is dollar cost averaging. So you must do everything but not stop your SIP subscriptions. Whether you start new one or top it up, that is a different thing. But at least the old ones, you must continue. Because if you don't do now, then the very concept of SIP is not going to work for you. So, and second is that whenever you are concerned about the market, see, I meet a lot of people. They all say, sir, is this the time to get in? No, we are permanent bull, and depending on the market, like yesterday I would have been depressed. But when the markets are nice and, bouncy for 3-4 days, the talk somewhat becomes a little more bullish. So I am really scared of, what the other side does. So they always say, sir, this is the time to buy. I would definitely say that, yes, this is the time to buy. But whenever you're concerned about the market, and I think everybody is concerned about what time is the right time to buy. Best to get into systematic investment plan, SIP or whatever. So you put it 12 months average. Do it if you want to do 12 crores, do 1 crore every month. You want to do 12,000, do 1,000 crores per month. Whatever is your money, but that will get you out of this dilemma of what is the right point of time. Because see, bottoms are made for fools and liars. Nobody will get it. So don't even aspire to do it. So if you do 12 months average, you're done well, and then enjoy.
Well, I appreciate your time. We've covered a range of topics. It's not been a very bullish chat for a change, but I guess the message is important.
I said I'm still a bull.
Like they said that what is the best time to invest? Like you said last time, it's not today, it was yesterday. So in India, for a genuine investor, keep the patience, and this shall also pass.
Yes, thank you.
Well, I appreciate your time once again, and thank you for joining us. And that's it on this special edition of Coping with Selloff 2019.